The market finally pays attention to Congress's game of chicken. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. Now that it looks like a miracle is needed to prevent a government shutdown, stocks took a hit here in the U.S. while foreign markets floundered. Joining me now in studio is Jason Moser and Matt Argersinger. Our top story. Up until today, the market had regarded the budget battle on Capitol Hill as mere posturing. But with a government shutdown looming at midnight tonight, investors are now sitting up, taking notice, and cashing out. So, Jason, I think I know what you're going to tell me here, but what is your foolish advice for investors?
Well, I don't know. I mean, does this qualify now as really like DEFCON 2? I mean, is this like inevitable that there's a government shutdown? Because I don't know that I would actually really mind it all that much. I like these headlines a lot. I think that these are great opportunities to pick up companies that you may have on your watch list. I mean, the short-term sort of things that go in and out every day with the market, these headlines, it's just amazing to me how quickly people can change their minds over companies and businesses that are so fundamentally sound. You know, they're buying it one day and selling it the next. We don't operate that way, so I like it.
So Matt, to his point, are there any companies that you're looking to hopefully pick up at a discount here? The market takes a tumble, takes these stocks with it.
Right, yeah. So you in situations like this, you want companies, I like to look at smaller companies that aren't big enough to be entangled with government anyway, companies that aren't in the defense space, companies that might, energy companies might not be good here either, because if there's a government shutdown for a long time, energy demand should go down. So one company I'm looking at is a company called Interface. Ticker's TILE. That tells you a little bit about what they do. They actually make carpet tiles. They're one of the largest carpeting companies in the world, even though the market cap's only about $1 billion. What I like about them is that they're growing very nicely. They have a floor consumer brand that's growing like gangbusters in the carpet tile segment, and they're about 40% international. So they have a little bit of geographic exposure there, and only a small sliver of the revenue comes from the government. So Interface, one I'm looking at.
All right, Jason, how about you?
Yeah, I mean, I like where Maddie's coming from there. I like looking at these smaller companies, but I think generally speaking, I just like looking at these sort of growth stories that maybe have valuations that people think are kind of high. So when the market crisis hits, and these are the stocks that really sell down. So it's not a small company, but LinkedIn certainly is one that I continue to watch. I own shares personally already, but to me, this is a story that's kind of gone from doing something, is kind of like a career builder, job finder sort of thing, to really now they're just the only ones doing what they do. And they continue to really develop that site, build out the content, tremendous leadership team. And I mean, you look at the company just continues to grow cash flow from operations, which I think is important here because they continue to reinvest in the business. So if the market were to hit LinkedIn tomorrow, I would certainly have that one right up at the top of my list.
So interestingly, a study came out today from the Lindsay Group that said that the government shutdowns that happened in 95 and 96 had no meaningful impact on the market. So do you still like these stocks if today is just a blip and much ado about nothing?
Oh, I certainly do. I mean, full disclosure, I've already bought an Interface, and I certainly would buy more regardless of what happens to the government.
Yeah, no doubt. Like I said, I own LinkedIn today, and I plan on buying more at some point down the road.
All right. Well, now it's time to look at some of today's movers and shakers. The Active Network is up a whopping 26% today after a private equity firm agreed to take the company private. Fun little fact, in its 15 years of existence, the company hasn't turned a profit, according to Reuters. So, Matt, going private seems like the right move.
Well, it's definitely the right move for me, because we've had this company in Rule Breakers, a service I work on, for a few years now, and it's just been one of the most volatile stocks. I mean, it's been up and down. They've had management changes. As you said, the profitability's never really been there. It's one of those companies you look back and say, why did they ever go public? It never really made sense. It was an interesting idea. I mean, sort of managing these events and these corporate things, mostly in the physical education and races and things like that. It just never really caught on. I'm glad to see it being bought out. I don't want to say good riddance on it, but I'm glad I don't have to cover it in my service anymore. And I'm glad for investors who were able to buy over the past 12 months, because it is a nice premium, and certainly a lot of those investors were able to get a nice profit out of today.
Facebook today has announced that it will follow Twitter's lead and provide TV networks with user data, including users posting private messages about TV shows. So, Jason, if I'm on Facebook And I am. It just so happens that I am. Should I just get used to my data being sold to anyone, anywhere, at any time?
I mean, maybe I'm just naive here, but I was kind of used to that the first moment I signed up for Facebook. I just assumed they're doing that already. I mean, this is a registered user base of more than 1 billion people, right? And that's been the argument with Facebook from the very get-go, is they have this treasure trove of data. I like what they're doing here with the TV networks. They're putting that data to use, and I think they're trying to prove their value to where a lot of these advertising dollars are spent. We know that's how Facebook makes their money, through advertising. So while I think they have a hurdle in that advertising is not very complementary to their platform, I think they need to kind of figure that one out. I would not bet against them figuring it out, so I do like this move.
Achilleon Pharmaceuticals lost more than half of its market cap today after the company said regulators would keep a hold on a study of its hepatitis C drug. So Matt, was the news as devastating as the sell-off would suggest?
I think it was, because I mean this hepatitis C drug that they have in development was really their biggest product, biggest potential product for Achilleon, and it looks like it's not going to happen. So yeah, certainly it's devastating. I mean, hepatitis C is a huge. I had no idea before I looked at this stock, but hepatitis C actually affects 170 million people worldwide. It's an estimated $20 billion market for treatment, and Achilleon was really trying to become a major force in that market. It doesn't look like it's going to happen, so I see the sell-off. Again, this is just another example of the risk and reward of investing in biotech, because here you have a huge market opportunity, a potentially really successful drug, and you're betting on that. It doesn't happen, and look, investors are down more than 50% today. So biotech's a very tough place. The best way to play it is to have a basket of these all the time.
And finally, AMC Networks hit Breaking Bad aired its final episode last night. Because of shows like Breaking Bad, Game of Thrones, Homeland, and others, some people are calling this the second golden age of television. So Jason, how do you invest for this? Do you go with the networks, or do you go with like a Netflix?
I feel like you have to kind of cue the sad music here. I'm really upset that Breaking Bad is done.
No spoilers.
I'm not going to spoil it for
spoilers, by the way.
But the show is done, and let's just, by all accounts, it was one of the most successful on TV. And I think it just kind of adds to the saying, it adds credence to the saying that content really is king. No matter how you get it, it's really the content that matters the most. And so you look at something like a Netflix, I think that's a good example of a company that's sort of changing its model, developing more of their own content. And I like that. They're kind of trying to become a little bit more of an HBO. As an HBO subscriber, I love their original content, so I think that's a big deal. Disney, they're talking more about getting into the streaming game. I think AMC, they're going to continue to succeed by developing all of this new content. And so really, for me, that's where it lies. The success in the content. If you can invest in those winners, I think you do pretty well.
All right, well, that's going to do it for today. Let's look ahead. What is one stock on your radar, Matt?
Sure. Well, we know Twitter's on the verge of going public. Their S1 is still confidential, but there's rumors that it might go public this week with their S1 information. So I'm looking at Sina, which is already public. It's one of China's largest online portals. They own Weibo, which is China's Twitter-like service, over 500 million users. It's public already. It's about a $5.5 billion company. If Twitter IPOs somewhere in the $15 to $20 billion range, which is what the market seems to be thinking, I look at Sina around $5 billion. I say that's kind of a compelling idea for me. So I'm interested to see how Sina reacts, how the stock and maybe how the business reacts to Twitter's announcement maybe this week.
All right, Jason, how about you?
Yeah, Ford has September car sales coming out tomorrow. It seems like Ford and GM, the U.S. automakers, have turned a corner at least, and things are looking better overseas as well. Ford's a bit of an interesting story as well, because we know that CEO Alan Mulally is going to be stepping down at some point here through the end of 2014. But now the chatter is that COO Mark Fields will be taking that position at some point, which makes a lot of sense. I think he's really gotten a lot of sort of the culture education from Alan Mulally that's helped really turn Ford around. I'm still not convinced that Mulally is going to be the guy that goes to Microsoft. I think that Microsoft's problems are less cultural and more innovative, but I guess that remains to be seen. I'll be watching Ford tomorrow.
All right, well, thanks, guys. For Jason Moser and Matt Argersinger, I'm Alison Southwick. Thanks for watching.